Reinet is an investment vehicle created as a result of the restructuring of Rembrand and Richemont, the Rupert family businesses in 2008. Its principal asset is 4.3% of British American Tobacco. It has a market cap of 30 billion rand and a price to earnings ratio of 3.4, but pays no dividends. So what do you make of Reinet right now, Paul?
Well, it's interesting because it's exactly what you said there. The Rupert family elected to convert most of their British American Tobacco shares to this entity, and it's got a market cap of 30 billion rand, so not insubstantial at all. But it's an unusual animal. It has a big stake, as you pointed out, in British American Tobacco, which is London listed and has done particularly well. It's done even better here in South Africa because of the weakening of the rand, but even in London it has done well. So it gets that big dividend check from BAT. People thought it was going to do exciting things because Johan Rupert is a clever man and he's got lots of clever friends and he's got lots of rich friends, and so they sort of meet each other around the golf courses and bars of Europe and come up with existing ideas and so on. However, it's not really done very much. It's kept its cash, it's kept its British American Tobacco shares. It's made a few investments in investment asset managers, Trilinear, and it's got a stake in a new thing called the Pension Corporation. But most people have wondered what it's up to. What it has done is earn excellent fees for its internal management company. It charges a 1%, and this Rupert-linked management company extracts basically 10% of any increase in net asset value since the listing date. And during the time, because of the British American Tobacco share doing well, they've extracted hundreds and hundreds of millions of rands worth of fees from the investment trust that the external shareholders are buying into.
Paul doesn't seem too excited about this one. How do you feel about Reinet, Mark?
You know, we like British American Tobacco, but we prefer to play it directly. You know, obviously we can just trade it as we want. And there are some interesting businesses, as Paul said. You know, that they have bought the private equity book of Lehman Brothers when they went belly up. They've got some US mortgages, some US real estate, and there could be quite an uplift in that. The one thing we don't like about this business is that it doesn't pay any dividends. And the reality is to charge 10% of performance when often the performance isn't generated by Reinet's management. It's generated by other businesses like British American. So for us, it's also one of those stories where unless they change the fee structure, it deserves to trade at a 25 to 30% discount to its NAV, which is where it's kind of trading at the moment.
Would you be getting in right now on the stock, Paul?
No, because I don't like British American Tobacco as an investment, because for me anyway, BAT, as well as it's done in recent years, has some real regulatory risks associated with smoking and curbs on smoking. One of the most important markets for British American Tobacco is Russia. You know, in Russia, somebody was saying on one of the other shows, you can buy half a litre of vodka for $1. Everybody smokes there. All the men smoke. Some of the women don't. But they are kind of figuring out, hey, this has got like a health implication. So for the first time in Russia currently, there's some cigarette-related restrictions coming in. But just to throw it back to Mark, so understand, if you buy this one, it's a discounted entry point into British American Tobacco. So why wouldn't you do that if you wanted to buy British American Tobacco? You worried there's a sort of value trap and the fee thing, or?
Both. But in fact, that is a value trap and there's the fee thing. But if I buy British American, I get the dividend. If I buy Reinet, they get the dividend. So why would I, you know? There's often some guys used to play the R between the two, you know, go long Reinet, short British American, but your carrying costs and the fact that they pay a dividend is what's killed that thesis. So I just think it's, in my mind, if you want to, you know, if you want exposure to something, why go through the discount? Why go through the holding company when you can buy it directly? If British American was unlisted, then I'd definitely be holding onto Reinet.
So are you hot or not on this one?
No, we don't like it.
Paul, hot or
not?
No,
not hot for me. And, you know, whilst these other interesting things are interesting, they're still relatively small. Look, I would only get interested in this if Johan Rupert was to come up with some fabulous idea. And let's say they've had a few in their time. I mean, he launched Vodacom as an investment. They launched ETV. You know, they got involved with Canal Plus and with Naspers and Rand Merchant Bank and, you know, Richemont. So they've had some wonderful success stories. If they were to announce that they were doing something in Reinet which was really exciting and they were going to fund it by selling all the BAT shares, then I'd get excited. But for the moment, no, not hot.